Well, traders, we're all out of the silver position. The trade came to a close this morning after momentum has shifted back in the opposite direction. At least for now, the price action on silver is not quite doing what I wanted to do. That being said, I took profits on the position, entered about 9-10 days ago, and then we saw this big push higher. And my thought process here was basically we had to hold support, and if we could do that, I would stay in the trade. But if we could not, it was time to cut it. So I actually closed out of my silver position here this morning, like I just showed you inside of our Signals VIP room, for a profit on this trade. And I am looking to potentially get back into the trade, but I'm not in a rush. Let me go ahead and walk you through in terms of metals where I'm at, as many traders watch this channel specifically for my commentary on indices and metals. They're a very popular topic on the channel. Let's talk a little bit about gold and silver. I'm going to start with silver. So silver is still getting a very bullish reading on the EdgeFinder. So you may be asking, Nick, then why are you no longer in the silver trade? And the reason is because while the EdgeFinder is my guide, it's my quote unquote compass, the twists and turns are my technical analysis. It's kind of like a GPS. GPS or a compass could generally tell you where, generally speaking, the direction is, but a GPS kind of gives you the turn left on Wall Street kind of thing. So anyways, I'm looking at my silver position this morning, and we broke momentum here to the downside. And with that, I decided to go ahead and close out of the trade. But I don't think I'm done with silver, because with such a strong reading on the EdgeFinder, what I'd be looking for would be some sort of price action confirmation that bulls are back. But right now I'm getting some kind of mixed signals / bearish short-term technical analysis views. So my view on silver would be I am still bullish, just taking profits for the meantime and looking to either retest or buy on a retest somewhere, or look for momentum to kind of continue to the upside overall. But all out of the trade, nice profitable position, and I'll share any updates or new trades that I take inside of our VIP room. And if you're interested in getting notified anytime I take a trade, we'll be doing a special discount for today only. If you're interested in checking out the VIP Signal service and getting notified anytime I take a trade on gold, silver, stocks, indices, I trade a little bit of everything, Forex as well. Anytime I share a new position, it gets notified to all of our members inside of the VIP room. If that's something that you're interested in, you can get information down below in the description. And if you speak directly with us on our website, a1trading.com, or use the first link in the description down below, you can chat directly to our support team, where we'll get you set up with an extra discount for today only. So now we can talk a little bit about gold, which is holding up better than silver here today. Actually, despite silver's flush to the downside, we actually see gold flat on the day, kind of putting in this bit of a doji candle pattern. Now, again, I've been saying on the channel many times that gold has been something a bit frustrating to the trading crowd. A lot of people wanting it to pull back, a lot of people who are short, hoping that you get some sort of reversal. But I've been saying it's time and time again that I don't necessarily think that gold has to reverse. Could we get a pullback here? Possibly. I think we're due for one, but there's a big difference between due for a pullback and now's the time to call out a pullback, right? I actually think that for me on gold, I have two entries that I'd be interested in trying. One would be a pullback briefly to 28.75. This area of support could look interesting to me. And if that doesn't hold and we actually get a lower retracement, I like the idea of a 27.80 level as a possible attempt to get long as well. If you're familiar with my style of trading, I oftentimes take quick stop outs when trades don't work out right. But when they do work out right, I tend to hold them for some time. Like that silver trade that you saw, I entered and exited about 10 days after the position first started. Gold is getting a +7 on the EdgeFinder, which is a bullish reading. So if we get that retracement, that should be an opportunity for me to look for some opportunities to get long. Doesn't mean it's a guarantee that gold goes higher, but as always, trading is educated guessing. But as always, good trading is just educated guessing. Bad trading is thinking that you know for certain what's going to happen next in markets. And part of the reason that I'm so bullish on metals is because of this type of risk of stagflation type of environment that I keep talking about on the channel. Specifically, a lot of our growth metrics are flashing red on the EdgeFinder. GDP growth, services PMI, which make up 70+% of United States' GDP. You have retail sales missing expectations, and you have high inflation, which high inflation, strong rising inflation, we call that combination, slowing growth and rising inflation, a potential stagflation environment. And I want to talk about what this means for the Fed, because the reason gold starts to look so attractive in this environment, in my view, in my opinion, is because the Fed doesn't really have an answer for this type of situation. Think about it. If you're the Fed and you want to stop a weakening economy, what do you typically do? You cut interest rates. But what if you have stubborn, sticky, and rising inflation? If you cut interest rates, that can really accelerate and become devastatingly recessionary. So what does the Fed do in that situation? Well, they don't want that situation. That's the long story short. If you get weakening growth and rising inflation, think about it. If we go into a recession where interest rates are still high and inflation is still rising, think about how painful of a situation that is. People getting layoffs, plus people seeing prices rise every week in the grocery store. That's no fun. And it's also no fun for the Fed. So what happens in that situation? Well, people sort of lose trust in the financial system itself, and that's when gold typically skyrockets. So on this channel, I don't make huge predictions of what I think the future is going to entail, but right now, our heat map is showing that we are at risk of entering into more of a stagflation type of environment. So that is why I am persistently bullish on metals and why I'm looking at gold and silver as possible entries to continue to trade the long side. If we get a larger pullback in gold, I quite like the idea. By the way, you can try out the EdgeFinder for 30 days using the link in the description down below. I know a lot of people are very excited about our new heat maps that we've added. We do, by the way, have plans to add more countries to this list. So far, we have the US, the United Kingdom, European Union, and we have Japan as well. All of our economic heat maps can be found directly in your EdgeFinder if you already have a copy. That was a completely free update we've been launching recently. Taking a look at the commitment of traders data, we can see what institutional money has been recently buying and selling. The big buys of the week were the US dollar, the Australian dollar, the Swiss franc, the Canadian dollar, the euro, and the yen. I want to talk about the Australian dollar for a second. What is this telling us about global markets? Well, it's telling you that maybe there's a resurgence in China. This is my speculation here. A lot of times the Australian dollar trades in tandem with what's happening with China, due to the fact that the Australian economy typically is known as a commodities-centric economy. They export tons of raw materials and stuff, and where does a lot of it go? It goes to China. Chinese stock markets have been ripping here recently, so I find it not coincidental that the Australian dollar is also getting a little bit of a bid. So I find that really interesting. It's kind of a commodity-centric currency, and so typically we see copper, iron ore, things like that trade somewhat correlated to the Australian dollar. Other notable buys is there was some appetite for buying the US dollar, the Swiss franc, the Canadian dollar, the euro, the yen. And if we take a look at some of the sells, I found this to be really interesting. You had a lot of index selling, right? So Dow Jones, NASDAQ, S&P 500, US oil, and gold here as well, actually, interestingly enough. But the big one here, big index selling and sort of some commodity hedges potentially coming into the picture here. Silver also was bought by institutional money. I've selected the US dollar on our COT data history page, and what you can see is some pretty consistent demand for US dollar long contracts. Institutional money still seems to be parking money in reserves in the US dollar, but I also want to talk about another topic that we've been talking about on the channel, the Japanese yen. Look at this, institutional money accumulating Japanese yen. And there's an interesting story happening in the Bank of Japan here recently. If we take a look at the Japanese economic heat map, we've been talking about this on the channel a lot. There's a lot of strength here that hasn't been there in a long time. Inflation ticked up to 4% in Japan. And so Japanese bond yields have been rising dramatically. Meanwhile, other places have seen their bond yields dropping. Basically, the expectation for central banks to cut interest rates around the world has been kind of steadily rising. More rate cuts are expected this year for the ECB, the Bank of England, the United States. But then you look at Japan, and they've got rising inflation and an economy that seems pretty upbeat relative to forecasts. This could be something interesting, and I really don't want to lose focus on this year. We're seeing the central banks looking to hike or cut rates, then Bank of Japan is looking to actually hike them, right? And then you've got the COT data showing institutional money is accumulating Japanese yen. This is a story that I think has a lot of potential to move markets the rest of this year. And it could shake up the kind of risk on, risk off sentiment that we're seeing. We're seeing some follow through here today, not crazy follow through, but some follow through here to the downside for US indices. And I do find that to be really pretty interesting. I do think that if you get some yen strengthening that really starts to pick up this year, it could shake the markets a little bit. Why? A lot of the US stock market, European stock market, the rest of the world's stock markets is actually propped up by the carry trade, where traders are shorting yen and buying everything else. Now, when I say shorting, what I actually mean is borrowing. A lot of hedge funds, a lot of big money actually goes to the Bank of Japan and borrows a bunch of money at their low interest rate levels, and they take that and they deploy it into risk assets elsewhere, buying stocks in the US, buying stocks in Europe, buying other currencies, right? There's this flow of money out of Japan and into the rest of the world. If that trade reverses, if we start going from, where we've been going, east to west money flows, if that reverses this year, this could be pretty scary for the market. If you start to see money deleverage and go back west to east, we're seeing it in China. We potentially are seeing it in Japan. There's this money flow that's going to the east rather than to the west. Don't miss this part, because it's really, really important. If you get the Bank of Japan aggressively hiking rates this year because they have an inflation problem that they're starting to deal with, it could ricochet and cause problems in many other places. We saw that briefly back in August when you had the yen carry trade concern, and many people blew it off as just a fluke. It was very short run, right? This was the yen carry trade concern. We reversed course pretty quickly and actually started a huge movement higher. I just want to caution people that if you get the yen carry trade unwind start to materialize a little bit more aggressively, you could see risk assets move much lower. This is why the yen and the US dollar are centric to many other areas in the market, not just their currency pairs. Bitcoin's down another 1.6% here. We'll see if it can hold the support level around 93,000. If we do get a larger break through those lows, I would be really cautious with Bitcoin, because you could very quickly see a larger scale sell-off down to low 70,000s beyond. I mean, you have some support here around 85,000, let's call it, but it's kind of a minor support. This level has been tested many times and held, very well, but I'm just warning that if you do get a larger risk off move, Bitcoin could actually see much lower prices. I'm not super bullish on Bitcoin at this time. It's too range bound for me, and I don't really have any setups currently on the top setups page on the EdgeFinder. Did you know that you can get a free copy of the EdgeFinder with our video sponsor today, 8cap? If you head over to a1trading.com/8cap, you can find our partnership with them, where you can actually deposit money into a brokerage account. And if you exceed the tier list that's listed on our website, you can get a free copy of the EdgeFinder with your sign up and your deposit. If you have questions about this, you can speak directly to our support team on our website, a1trading.com, or click the first link in the description down below. Again, this is a way to get a free copy of the EdgeFinder. Essentially what they do is 8cap actually purchases a copy of the EdgeFinder on your behalf if you deposit, I believe it's $10,000 US or greater, into a brokerage account with them. Please note this is for people outside of the United States only, so if you're interested in this offer, please send us a direct message on our website. We'd be happy to assist you with that. You start out with kind of going to the drawing board and saying, am I supposed to be in short positions at all for Euro US dollar, right? That's kind of the point that I was getting at, is like, do entries and exits play a role? Of course they do, but they should come after the question, should you be in a euro dollar short at all, right? If you're supposed to, then you can start looking for better entries, where you're going to close out the trade if you're wrong, how you're going to manage your risk, your position sizing, all that stuff is also important. But just knowing, am I supposed to be in a short, yes or no, gives you a nice starting point to really build the rest of the trade around.
Back to your question, you said, what do I look at? I have looked at. I'm still in. I don't know. Did I do something? Oh, okay, there we are. I'm still in my euro dollar short. From 19th of February. So I've been in serious drawdown. I am by what do you call it, luckily still in, and now I'm bracket break even.
Wow.
So yeah.
Well, hey, congrats on the move back to break even. And I think you may be onto something with the euro dollar shorts. I mean, euro definitely seeing serious lackluster growth. So we'll see what happens with that. It really depends on what happens next with the US jobs data. I feel like that's the next kind of big play for US dollars. How does the jobs data fall, which we get, of course, in the first week of March, comes up real soon. So kind of looking forward to jobs data, see what that brings for US dollar. Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things, all of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.